what I would say is that the Australian dollar's strength today, that seems to owe something to the fact that the Chinese authorities, specifically the People's Bank of China, has had more influence on the Aussie today than the Reserve Bank of Australia. They've announced a raft of easing measures aimed at trying to provide support for the property market, support for the not just the housing market but also the equity market. And in itself, it's probably not transformational for the Chinese economy, but it's certainly giving investors reason to believe that China is now getting serious about providing the kind of support measures necessary to achieve their publicly stated growth ambitions for this year. And given the obvious links between China and feeding back to Australia, including what it means for the Chinese currency, that seems to have been the main tailwind that has driven the Aussie dollar further above 68 cents today.
The Australian dollar has seen a big rise in the past week since the US Fed cut rates by 50 basis points. How rosy is the dollar's outlook given the widening differential between not just the Australian and US currencies, but other major currencies as well?
Oh, it's certainly providing a significant tailwind, I think, for the Aussie dollar, and certainly, to the extent that at NAB we don't think that the conditions for the RBA embarking on an easing policy are going to be in place before next year. And we've got not just the Fed, but as you know, the European Central Bank, the Bank of England, the Bank of Canada, various other central banks in easing mode. That shift in interest rate differentials between Australia and most other parts of the world is moving, albeit slowly, in favour of the Australia and the Australian dollar. And I think that is a principal driver, along with the fact that the broad US dollar picture is one of weakening in anticipation, and then obviously a little bit of a surprise at the size of the Fed's first cut.
Given that NAB's forecast for the RBA isn't for a cut until the second quarter of next year, where do you see the Australian dollar if the US Fed delivers the cuts currently priced in by markets?
Well, I think, one side or other, now it's realistic to think that we could touch that 70-cent level that we haven't been at for quite a couple of years. So officially our forecasts are for rising to just shy of 70 cents this side of year end, and then extending those gains, further towards perhaps the mid-70s next year. As I say, the interest rate story is only one factor, though. The outlook for the global economy and global growth is going to be hugely important there. And depending, as I say, on the outcome of the US elections, one of the market's biggest fears is that were Donald Trump to be re-elected and actually followed through on some of his stated, sort of publicly stated policies of engaging in widespread additional tariffs, not just on China but the rest of the world, that poses a threat to global economic growth or global recovery, and that would actually be a big downforce for the Aussie dollar were it to eventuate. So although our core view is that Aussie will progress upwards and to and through 70 cents here, there are certainly some risks running the other way, relating to developments that are really completely outside of Australia's control.
The RBA's most pressing concern remains persistent underlying inflation. Will a soaring dollar help to dampen inflation?
Well, I think soaring is probably a little bit strong, considering that we've been trading sort of close to sort of 65, 66 cents, and now we're up at 69. It's not an enormous move in the scheme of things, and import price pressures in Australia haven't proven to be really sensitive to relatively modest swings in the exchange rate. At the margin, I'd say it turns a small upside source of pressure on import prices, at least, into perhaps a very mild downturn. But the broader trend in commodity prices, and particularly oil prices, I think has the bigger influence than swings in the exchange rate, just at the moment at least.
Ray Attrill, good to speak to you.
Thank you.